Hello. Morning.
Morning, Leo. How are you?
Morning.
Good on you. Hey, good morning.
Long time, Janae. Good to see you.
I know, it's been forever. They just stick me on other calls in the morning usually, so thought I would jump on real
Yeah.
quick this morning while I had a minute.
Yeah, we're trying to close Westwood and finally we close.
Beautiful.
Nice.
How was your vacation, Leo?
Huh?
How was your vacation? You were somewhere
No,
in
no,
somewhere in
no,
your
no, 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 no. I didn't went to vacation. I was yeah, we're trying to we're trying to close that deal. So it was before I closed. That's when
before
when
our
I
close.
went to vacation.
Yeah.
Yeah.
Morning, everybody. We'll give it a couple more minutes for everybody to join.
Phelan.
Morning. So, Janae, are you back in US time zone?
Getting
Still-
close. Yes, getting close. Good. Still doing the like wake up at 4 in the morning thing. But that's okay.
They call that first world problems, right?
Say again.
They call that first world problems, right?
Yes, there is no complaint. There's no complaint from me on that one. To deal with a few early hours, but yeah, it's good. It was all worth it.
Nice. Happy to hear that. Ooh.
Morning, everyone.
Morning.
Morning.
Hi, Janae.
And
How you doing?
Hi. Good. How are
It's
you?
Good. It's been a while.
I know, too long. I like when I have minutes to get on these calls. It's like, this is like old home.
Yeah. Good to see you, though.
Thank you. It's nice to be here.
Everybody, we'll give it a couple more minutes before we kick things off so that everybody can join this morning. Right. All right. Well, actually, Leo and David, do you guys want to kick things off and tell us how last week went with closing and takeover?
Oh yeah. Thanks. And good morning to everybody. Yeah, last week was great. We finally closed and we had the property manager, new property management on site um to take over. So everything went well, and they took over. They are doing the changing the utility stuff thing and everything, and we got everything we needed to. We requested from the seller, like the tenant leases, the pager, like the delinquency and everything, all the stuff that we needed, they gave us. So it was a smooth closing, and we're excited and pumped to move to the next level for asset management and next deal.
Awesome. Anything that stood out from last week that you want to share with everybody on lessons learned or things that were new? Anything that stands out?
The things that stand out, it was a smooth closing. It was not a big deal. It was just the property management, the previous property management company. They the property manager actually left the property when we immediately closed. She left the office without even doing a proper transition. So we have to go there to try to figure out stuff, figure out the key code and all that. But I had to call the seller, and the seller told her to explain that to us. So she was pissed off because she was thinking that we are going to inherit her and continue with her, but it didn't work that way. Apart from that, it was a lot of work between back and forth with the lender, with the investors and everything. But apart from that, it went smoothly. Except David, do you have anything?
Yeah, that's about it. Just it was kind of funny the transition with the property management, but I mean, I understand she's got some ill feelings towards it, but you know, that's kind of business and how things go. Nothing against her. We wish her the best, but yeah, that was about it. Just kind of figuring everything out on our own once we got in there. And but the broker on the seller side, he was really great with communicating with getting, you know, the key codes and everything we needed. So yeah, that was about it. Everything else went really smooth. Property management, they love the deal, they love the site, they know that they're going to be able to do great things with it. So we're just looking forward to seeing how things move forward and kind of get to work here in the next few months, getting everything situated and how they should be.
That's very exciting. Anybody here that has any other follow-up for Leo or David?
I have a question, maybe more generic, this the Midland deal, this one of Leo and David is, I can't remember exactly the number of unit, 60, 70, right? And do you guys do a bank audit? So do you ask the seller to provide copy of the bank statements and match that they actually have received the rents in the last 6-12 months, or that something is not generally done?
Well, for that we
Yeah.
actually go ahead.
Yeah, we had the seller provided everything. They provided the rent roll, they provided the bank statement for
Bank statement as well.
yeah, for money that was inside the deposit and the running account. They were not obliged to provide the statement because they were supposed to say no to show the bank statement, but the seller was nice. They were very cooperative. So they provided a bank statement, bank deposit. They provided a rent roll from since we got the property under contract, April, May, June, July, and August. And they provided a T12 as well. They provided the delinquencies, all the tenants, the new leases and everything. In fact, they had everything. Freddie is not even gonna finalize the loan if you don't provide that. I mean Freddie, sorry. So they had all that. Yeah.
Yeah, no, but I think you're right. The bank statement is not a must to have, in order to close, right? It's just something that will increase the confidence level, making sure that they haven't declared something that is not the reality with the income, So that was good. I like the transparency.
All right.
Yeah, that's kind of part of the deep dive on the underwriting too, is going through and matching what they say their bank statements are with expenses and everything in the financials. It's very, very important.
Right.
Yeah, and actually, Rodolfo, to add to that, so within our LOI template, right here, number 29, we are asking for operating account bank statements from the past 3 years, so we can do those matchups. Now, obviously, whatever is in the LOI is also a point of negotiation, so perhaps they can, negotiate themselves out of that. But we start off with, we're requesting it. We would like to see it because we absolutely would like to do those verifications. So we can double check those things.
Yeah. No, thanks. So one question for Chirayu, for Grove, did we get them or no, the bank statement?
So for Grove, the seller would provide a bank statement only if the lender requires. And lender doesn't have any such stipulation. But we got rest of the details we need from their systems of records. So that was good enough. So every
the-
seller has a choice. Out of the 3 LOIs that we have signed, Parquet, Serrano, Amalfi, and Grove, all 3 of them did not agree to the bank statement. So it
Who's the
depends.
lender on that one?
Newmark. Yeah, and it's a loan assumption, so the lender is all the more reason for not asking. She's like, it's just getting assumed. But seller was very transparent. He gave us all the details of prepaid, delinquency, everything that you can imagine.
But not the tax.
One more, yeah, sorry.
I'm saying, did you receive also the tax statement? I mean, the tax return for the previous 3 years. So this was also not required by the bank.
Not required. Not required. The seller is like, if anything that is personal bank statement, tax returns, etc., if the lender requires, he's happy to provide.
Oh, man, not personal. I mean,
That's
LLP.
and that's the case with other buyers also, other sellers also. So, Quinn, one question for Leo and David. Did you all guys go through a detailed round of due diligence for this property?
Yeah,
No. Was it like a
we
paid
did a
diligence or did you guys do it?
which due diligence? Are you talking about the first 30 days due diligence, or complete due diligence, or
So
the
complete due diligence, which means walking the units, doing the lease audits, and
oh yeah.
also exterior due diligence.
Oh yeah, we did that. So that was the first 30 days.
Okay.
Yeah, so we hired we
Inspection
hired
company.
inspection company, sorry.
Special inspection.
Yeah, so we went there, we saw all the properties. I and Dave, we went there.
Nice.
We visit all the units, and they did a detailed due diligence inspection, and we did the lease audit as well. And the bank also did the lease audit as well on their own part, and the property management did the lease audit as well.
Any surprises from at least a capex perspective? After due diligence, did you find any surprises saying that, oh, let me go and revise my
Oh
capex
yeah,
budget? Any
yeah.
stories, horror stories?
We found some plumbing issue.
Okay.
We found some plumbing issue that was backing up, had a sewage backup that was causing some leaks. So we renegotiated. They gave us 100K, and then they said they are gonna fix some of the water heaters and the HVAC unit, and then the AC, the stairs that had some safety problems, which they did. They actually did what they said. And then we had a credit of $100,000. So we are gonna
Okay.
use that. We are gonna use that to fix the plumbing issue. I and Dave, we already talked to a plumbing company. They came and did the estimate. So they're just gonna dive into it right away and regulate. There was a pipe. I think there was a pipe shift or sack something that shifted a little bit. Yeah. So they're gonna fix it so that we don't have that problem. Then
Yeah.
and Dave, we have a plan of doing some light renovations, right, Dave? Like some painting and
Yeah. Yeah. Other
and
than that back pitch in the
result.
pipe, there wasn't really anything we didn't expect. So underground, when they were snaking the drains, it came to a belly sag. So that was kind of over time. If it doesn't get cleaned out, it backs up into one of the units. So we're going to take care of that, just to kind of give the whole place some great curb appeal. And it's a 2013, so there's no need to go in and start renovating units or do any of that to get the market rents that we want. So we're just gonna paint the outside. That builder's grade paint is starting to chip and look a little bad outside. So we're gonna repaint the entire exterior. The parking lot was never surfaced, so we're gonna resurface the parking lot, do all new stripes, kind of give it that great curb appeal and that look, and also kind of help justify those rent raises that the renters are starting to see over the next few years without doing those renovations inside. And it's for going back to like walking those units that actually came to be very important and very useful, because as we were shadowing those inspectors, we did walk all 52 units, is just taking notes on little stuff like, who's taking care of their units, who's not. We kind of have a grill problem there with people putting grills outside, because it's not really balconies, but it's more like a stairway with like a little patio area, I guess you could say. And just all the notes that we were able to refer to, because Leonard and I, we walked all those units with the inspectors, just kind of shadowed them around for those 2 days. So it was very, very useful, and I'm glad we were there.
Wow, amazing. That's great. That's great. And was there a supplemental loan or a preferred equity raise for this property? And
No, it was just a
yeah, and the reason why I'm asking you is, like, in Groove, the original loan is a Fannie Mae loan, and Fannie Mae is always touchy-feely about supplemental loans and preferred equity loans. So I just wanted to ask, how does Freddie Mac work? So I just wanted to ask.
it was not a supplemental loan. It was just
Supplemental,
it was just a regular loan where
regular loan, no preferred straight raise, no preferred equity.
No preferred
equity
equity. It was
raise.
just
Oh, okay.
regular.
Straight raise. Nice.
Yeah.
Good. Thanks.
We also plan on for the capex. We also plan the current office that is there right now. We also plan on since the property manager on site, we are gonna convert it to a studio, because it has a bathroom, it has a AC, water heater, and everything. So it just need a stove, and we're gonna configure that and put it as a studio, and it's gonna be giving an extra $800 a month.
Oh, very nice.
Now that 52 goes to 53 units. It was all 2 and 3 bedrooms, but they built a wall in one of the 2 bedrooms to make it a 1 bedroom and then an office. So now we're going to turn that office into a studio.
Yeah.
So you're not gonna have a property management site, or no?
No, if
On
it's
site.
kind of rule of thumb,
Not on
we
site.
kind of say if it's not 100 units or more, there's really no need for property management on site. The current property management lady, she actually slipped up, because it says, excuse me, she's supposed to be there, Monday through Friday, but then she was like, oh, I don't even come in but 1 or 2 days a week just to collect rents if I need to do that. And so she's like never there. So it kind of goes to justify, if you get a really good property management company that knows the area, knows the market, they can take over, and there's really nothing for on-site property management to do Monday through Friday, to justify their what they're making every year. So
Nice.
And so the new property management, you're just gonna pay them a higher percentage, maybe let's say 8-10%.
No, not even. So we were probably at like close to $250,000 is what they were getting because the owner, he's an 85-year-old gentleman. He lives in California, wasn't really paying too much attention to this. And she was a lady, she wasn't really, I would say, qualified to be a property manager. And I guess she talked the owner into being the property
She was a
manager.
tenant.
Yeah, she was a tenant. And then
She was originally a tenant.
Yeah, smart.
Yeah, so the expenses were like over 250,000, and now with Capstone, they're coming in at a total of 6%, and that includes the leasing and everything. So we're actually cutting all those expenses right there down by almost that'd be like 45,000 a month, I think, or I'm sorry, a year for our new property management. So we're cutting all those expenses down by almost 1/5, maybe over 1/4, just by that right there. Coming in, managing this asset like it should be, getting the new property management in, and just a small portion of, that extra value add that comes back to us.
Yeah. Oh,
Yeah. So they had like to add on that, they had 2 employees on site. So they had the property manager and an assistant on a 52 unit. And then, as Dave said earlier, she just had a camera on the door, and she never goes to the office. So when someone is there, she talks to she talks like through the camera with the person. And I saw some reviews that people were complaining that they have called the number and she never answered. I actually called the number like 10 times, the office number, and nobody answered. So we're asking her, how do you get a new tenant? She said it's from word to mouth in a restaurant. So she didn't even advertise. And the property is like 96, 97% occupied. She never advertised the property. It's not on apartment.com. It's not anywhere on site. It's just word to mouth, like in restaurants. Can you imagine? And then second, the other guy that was on site, when we went there, and Dave, he was there doing PlayStation instead of like he was just like doing PlayStation all day long. So this property manager that we have currently, they are off-site. So based on your question, they are going to be charging 5% on the monthly rent. That's all that they're going to be charging. So it's going to drop the management fee from almost $200,000 all the way down to like maybe around $40,000 or $45,000 a year.
Yeah.
So that's what is going to happen. So, but the leasing agent, the lady there, anytime that she brings a new lease, or she leases a unit, she's gonna have like half of the first month rent. So, or it's gonna be like maybe around 6%, 6% a year. Yeah. So
That's good. 6%, and you don't need to
Yeah.
pay any salary.
Yeah.
All right.
Thanks.
Awesome. Hey guys, are you ready to switch over and talk about growth?
Sure.
So, as a quick update for how much we already have committed, at the moment, or as of last night, we are 450,000 in soft commits and 525K in cash flow portal commitments. So that puts us at 975K so far. Obviously, still have quite a way to go, but at least we got already some commitments in. Any updates from you guys on capital raising that you are looking to share or can share this morning?
Was that to me?
No, just in general to everybody on the call here.
Oh, okay.
Yeah, I have a
Unless
question
you're ready
there.
to go start, capital raising on Grove at Pinemont, like we're all for it,
Leo,
Yeah.
let's move to the next deal, come on.
So I have a question there, Ellen.
Yes.
Sorry to interrupt. And then you said, 475 soft commitment and another 5 and change cash flow commitment, you said? What's the difference between that?
Commitments in cash flow portal. So those have already signed up and put it in cash flow portal. The soft commitments, those are commitments that we have verbally received, but they have not been confirmed yet in cash flow portal.
Gotcha. Okay. All right. Thank you.
I'll walk you through the flow. Mike, go ahead.
No, go ahead, Shrire. I didn't know you were sharing. Sorry, I was looking for something. Go ahead, Shrire. And I was going to share, but do yours and then I'll do mine.
Cool. No, you want to start with yours, then I can bake it into the overall schedule, then run the whole process.
Yeah, mine was just going to be sharing how the numbers were baking up on and how we're tracking it.
Oh, okay. Okay. I got it. Okay. So let me start from here, then we'll
Yeah,
give it to
because
you.
yours leads into this.
Yes.
Yeah.
So there's gonna be a full quick review, take about 15, 20 minutes. We'll walk you through, we'll talk through the cadence and the process and de-risking the whole thing. Some of you guys are being on the 5 o'clock, it's gonna be a little bit of repeat, but kind of bear with us. We'll give you the whole pictures of it, both from the orchestration of the whole contract to close and behind the picture what each of the segments are happening and how everything is tied up together against time. Right, and you have seen a version of the Westwood. We ran a similar version. It's a smaller. It's very intense work. It's a similar, faster process given the dollar size. So on that note, I think Westwood, Leo, just to share how that whole thing works. The team gotta have some de-risking as you go through. When the de-risking happens, you get to the closing, and then you continue notching the closing process. Plug the gaps as you go through and get to the closing, right? So beautiful thing was, I'll give an example on the Westwood. Westwood, very last, when it got to the closing, there was a little gap. We figure out what to plug the gap. We did the closing, got some breathing room, and we continue playing with it and doing our business plan. Very similar to that. So whenever something goes under contract, you know how much work that goes on the contract. Once it goes on the contract, we put everything on a timeline. And then depending on the intensity of the project and the capital raise, it's every week counts. And we ask the question for us to continue to play in the second week or push the contract forward the next week, what has to happen in the week 1? Once you get to the week 2, what must be true or what must happen in the week 2 for us to continue to the week 3, then week 4. So those are all validation points. So early on, it's all about I think, I hope, I planned, I talked. And then once you get into week 2 and 3, it's all about what's in the bank account, what's in the webinar account, what's in the commitment. That becomes really hard, right? So with the context, our first webinar, so what happened early on, it's all about the workflow, about creating the templates, talking to everybody else, getting the due diligence done and everything else. What they do, they don't have any big impact to the project success. They have impacts, they can assess the tone, but it has downside impact the most because you spend the most amount of money getting in. So as of now, just because we played with the Grove contract for the last 3 weeks, we spent about $25,000. And every week that goes up $3,000 to $5,000. So that's a cost of playing the game. So early on, what we do, those are the hard costs that you at-risk money. We may or may not get it back. I'll tie that up. First thing, it happens is right here, webinar. 1 is the first one, webinar 2 is the second one, and the third one. That has a cascading impact. So the equation is, if I need $15 million, in this case, we expect that I'm going to generalize $5 million on a pref check. That's a must-have. From that $10 million of retail raise, we have, let's say, 90 days or 60 days to run. First 30 days is 506B. We must be at a 506C, a 506B period with $3-4 million for us to trigger that 506C work, which is also why we have a go, no-go decision that we are being objective about market dynamics, everything else, then we go. The reason being we have that hard because up until now, it's about 30-35 grand of expense. The moment you go here, it's about $250,000 expense. So when you run project, you always look at the downside, you always look at the upside. Hope doesn't work at some point. You got to be hard at it as you kind of go through. So we're going through the de-risking process. Prep side, we have 2 folks right now. We're waiting on a term sheet. Something will happen this week. Sanjay, anything else you want to add on the prep side before I go? Okay, so I don't know where's he at. So, oh, you're on mute, bud.
Oh, sorry. No, I was just gonna say, we're working with the broker and reached out to, other network that we have had so far. And it's just a lot of people just shy away from Houston. They're shying away from Houston. They are scared. A lot of people have lost a lot of money in Houston. this deal is an example. You know, it's not losing money for the seller, but they have came down quite a bit, right? So, but no LOIs, no confirm, let's move forward type of from any group yet.
So we have talked to 67, that prep team, the prep broker that we worked, we have solid relationship, last 2.5 years of working. They ran the course on this one. They talked to 67 people. I have 67, 65 right around that. We had about 5 calls with them and 2 of them came about. It's the thing. It's interesting how relationship plays out. I'll talk about it. We hang out with some of those. We have some big advisors there. And also what happens if you are been there, done that, you also have some projects that didn't go right or you fought with somebody, it just happens, right? One of the guys that we hang out with on our website, one of the prep check writer from Canada, conversation went well. We're coming to a term sheet. We got an email, Shariah, what's the relationship between Massive and that individual? I was like, they're just a business advisor. We got an email back 2 days later, nope, deal is off the table because one of the fund partners had a wrong experience with that individual who had nothing to do with us. At the deal level, deal is off. I was like, what the hell is this? But that's life, right? It happens. So the pref, we'll find out. We have 2 people on the line. One party, it's a fund from New York, pretty big shop. And the other party, it's a smaller shop from San Antonio, or they have some exits in San Antonio. So I'm just running the shop on that one. On that note, I'm going to go back to the tech side. What we do is we built an equation, and that is the equation. Now, this conversation is just for us, right? Just to kind of share with you as you kind of run down. So what we do is that we all have our database, as you guys know, we work through it. And so we designed a workflow like equation A plus B plus C equals to whatever. So what we said is we have 1, 2, 3, 4 506B webinars. And then we get to go to the second phase of it, which is 4 506B C webinars. So we count how many people signed up. So from the equity raising, we have 12,000 people, 4,000 506Bs. So 100 people signed up for 506. No, the first one. We have some, not everybody showed up, so we pushed them out to the second one. We have 30 plus people showed up. We have another webinar that happened off Massive, for Massive pitch. About 35 people showed up there. And then we have one happening today. So in other words, so far, 119 people showed interest for this deal on the 506B perspective. That means we have relationship. Half of them are 506C. We take that and we benchmark that into how much commitment we have, what Ellen was talking about. So we have $1 million of soft commit. We have 120 people showed interest. That $1 million soft commit, maybe 10, 15 people. That's where investor relation team comes in and start talking to them and say, hey, where are you at, all this other stuff and everything else. So that's the orchestration that's happening. And the number perspective, we have $1 million now. By the time we get to the 19th of the next week, we must have $2 to $3 million. 2.5 seems to be that's the case. So we have to have a hard side of. So next week, this time, we need to have $2.5 million in our bank, almost, or signed document, not in the bank, signed document. We must have a pref on hand. That gives us the access to the second phase, go, no go of it. So that's the orchestration that we do. So that's the data that we have. And in between, we track everything. We're tracking who is opening, who's calling, who's a whole bunch of tracking that happens. So that's where we at based on where we at. And then we get into the no-goes. Behind it, when we go to 506C, Grove, we have a whole marketing plan being designed here because it's a big race. So we learned quite a bit on the paid marketing side. As I was sharing data, so we have a whole slew of paid marketing, whole slew of organic marketing for about 15 days laid out to a point. Like I'll give an example. We know the target audience, we know the paid marketing, we know the platform, we know what the content's gonna say and the type, creative type, what's the message, what's the outcome, where do they go, and would the audience filter all the way down to target date and a budget, and the whole thing is there. So there's a big orchestration that goes behind it. So we are getting ready for the 506C on the marketing side. We are getting ready from the data side or the IT side, workflow side for that. And now for us to be there those two things must be true to trigger. So that's how the scheduling is happening as you go through. And this is, I'm really proud of what we have done on the John side. The automation behind it is pretty cool as well. So that's the idea so far. I mean, that's the plan so far going back is marketing is ready, workflow is ready, and now we're going to the cadence of it. So what we say, every project is a high intent, high execution, less error, but deliver the workflow. So from our team perspective, we're delivering the workflows, delivering the look and feels, and we also understanding some of the hypotheses came true, some of the hypotheses not coming true. Two of the things, what was the biggest realization, we knew Houston was a soft spot. We optimized the project that way. So this project checks out all the boxes. It's not the project issue, but we didn't realize how sensitive people are against Houston. But the prep check guys, it just, they are, we just didn't know. That was one point. And the second point we didn't expect, typically with this workflow, money will pouring in, money was coming in, from 100 good conversion, not 100 to 10 ratio. So the second thing what we have seen is the last race to this race, there's a step change of feelings about multifamily going in for the existing investors. Again, most of our investors are existing. They have been in the game for the last 3-4 years. They invested before. They lost this amount of money, and coming back up, it's a big step change that the delta of the step change we didn't realize would be that wide. On that, what's working for us, we didn't realize that marketing could be effective once you hit that $5,000-$10,000 a month, and those new people will invest. So we're seeing that there's a brand new set of people coming in. They're investing in a multifamily. So if you haven't raised before, it's a good time for you to raise. And if you have some raising before, and if you have a set of audience who has been in the multifamily for a while, they are still angst at this point. So that's why we are seeing a slow conversion. But the interest is there. People like our decks. Feedback was, we're doing the right thing. We're communicating, we're improving, and all these things. But then when it came to conversion, that's 2 or 3 learnings that we had. New set of people coming in, that's an upside. We're going to double down on the 506C. And the second thing is that the pref side, Houston is sensitive. And the third one is, if you're an existing investor, have invested in multifamily the last 2-3 years, once you got burnt a little bit, and then you still gun shy about this this time. Fourth thing that we push this one forward as because this is the Q4 closing, which is your depreciation closing. There must be some odd people looking for depreciation. So we allocated $3 to $2 million push for that one. So the way we solved it, $5 million for pref, $5 or $6 million from the retail, $2 to $3 million from the extra push from the tax depreciation. So that $2 to $3 million extra push, we're seeing attraction, but we don't quite quantify that yet. So pref, we know where they are, retail, we know where they are, but and the depreciation part, we're still figuring out. And that's how we did the deal. That's how we do the play. That's how we go into the exercise of it. This is where we're at. I'll pause, open for questions, comments as you go through. I know there was a lot. I kind of brought everything down in like 10 minutes. So.
Should I have one question? Is there a way to ask an extension for when the money go hard?
Thank you. Thank you. Very good point. So when you settle the schedule, thank you. So if we started with the schedule, everything runs on a schedule, right? As of now, we have, let's say we are here next week. We have none of those. The question is, do we shut it down, take the hit for 30K and back out, or do we continue to do so? So our philosophy is that we're in all in. So the best way will be move that forward another week and a half. So not only it gives us some breathing room, but also it's, all the execution maybe it's taking a little longer time to decide. Maybe we'll do that. So what we thought is the better way to play would be optimize the timeline, push that go no go about a week to 2 weeks out. Mm-hmm. That triggered the work for Chirayu and Sanjay to engage the brokers and the seller to see where we at. For us to do that, the pref has to be true. The pref is the fundamental piece of it. So we're waiting for the pref now to gearing up with an extension negotiating as you go. Did that answer your question, Rudy?
Yeah, no, absolutely. Give us a little bit of breathing room, you know,
Breathing
for
room, yes.
yeah,
Yes.
make the decision. The only thing is 19.5, you know, including pref, you know, it seems high for a go or no go in accordance with what you're saying. Because if the pref is 5 and you said
Not 19, it's 15 total. It's 60.
Oh.
So I'm kind of roll up. It's
But it-
15 total, 5 pref, 10 retail.
I was so let me the 19 that you see there. So let's say right now you said, okay, I have line of sight for 15 million, right? How much of that am I confident is coming in? So there's a bit of a risk factor or a like, hey, this is the commitments we have, but until it actually is in, it's not there. So you take basically taking a bit of a safety factor on top of that.
no, I understand, you know, but
So
the
it's
line
it's a
of
30
sight-
so it's a 30% safety factor based on like if I talk to a lot of other people, is like, hey, all of the commitments we get early in a project. So we were trying to get this as a paper commitment. 30% of those show up, or I'm sorry, 30% of those fall out.
it's a big line of sight, you know, when it's still a 506B, in my opinion, because yeah. But
It's
I
big, but it's not big, but because we have to solve on a piece of paper. Think about it. 100 people signed up, 30 people showed up, right? So we'll talk to oftentimes someone, hey, can you commit? Fantastic, $500,000. I got this. 2 weeks down the way, oh, something happened in my job. I don't have the time. I got to allocate. So we try to solve for 120, 130% more so we can get 80, 90% rock solid. And behind this, Mike is running another shop with the team. They're continuously high grading the forecasted number as we get feedback. Like when we started on a 506B, we had like $5-6 million. And we high graded that to like a $2 million, almost $3 million now. And then we have to realize that. So Rudy, on paper, we solve 120, 130% of overall equity needed. And then we're knowing that by the time we get done with it, we'll have 50% slippage or 60% or 30, 40% slippage. That's how we look at it. So it's a lot, but we push ourselves to solve the lot. So when if we fail, we're going to fail at least where we need to be at, right?
Yeah, no, I understand what you're saying. I just don't understand if the decision of go or no go, if you remove from this 19.5, 5 million pref, meaning that you want to have 14.5 in soft commit to go, or as far as you have 3-4 million in soft commit, you
Got
will
it.
okay.
This is kind of off. So go no go will be so. Go ahead, Mike.
But this was the paper exercise, the 19.5 million. That's not saying that's the amount that we need to have in soft commits in the portal. You need to have line of sight.
Yeah, this is what it is.
For that, and then there's a each week you have a different line of sight each week. So by if we're not seeing that our soft commits or in our signed documents in another 2 weeks, for example, is hitting 3 million, we're not in the projection to get to the total raise.
I misread the.
Does that make sense?
Yeah, it does now. Sorry, I thought you meant 19.5
No.
soft commit by next week. I'm like, that would be a little challenging.
That's the point of failure, right? Yeah, unless God gives you a gift, here we go. I met a prince, take the money, it's not gonna work out. Or princess, whatever you wanna call it. Right? So not even a prince, king or queen, or at that level, $10 million check. So that's the update, and that's where we are. So we're going through the cadence of exercising everything else. For us, it all hands on deck. We're running all the shots from the prep side, legal side, JV side, family office side. And so that's the update. So it's a very, very critical juncture as you go through. Again, we learn quite a bit. We ask questions as we kind of go through and try to optimize as happens. So every webinar, every feedback, every text, every phone call, point of optimization as you go. And we're going through the process. We're still bullish. We still believe this is the project is worth doing. The returns and everything else, everybody's thing is the feedback has been clear. The project numbers is worth doing. At least from the investor perspective, it is investable grade project. The historical context is kicking us right now. So Rayu, Sanjay, you want to add something to it? Or Mike, at this point, I would like to hand it over to you.
Yeah. Just 1 second. Yeah, so let me see here. Let me share a little bit on sorry. Get back to the page. Okay. I shared a little bit for everybody also because a lot of you've seen this, but how we then translate into the actual tracking of oops. Here, you see is this the Monday you guys see now? The view it says Grove at Pinemont at the top.
Not yet, Mike. It doesn't show up yet.
Loading.
What's happening? Or again. Now?
Okay. Yep.
Yeah, okay. And so we have 2 trackers for Grove at Pinemont. One is the actual investors coming in Grove at Pinemont. The second one is the people, you know, co-sponsors working with us, other people, capital allocators working on that. And I know Maria's been reviewing with many of you as we're going through the process, you know, as to get more clarity, see what actions everybody's taking. And so what happens is every step, like the clarity on, you know, what is your database that you currently have that you're thinking of bringing in money. So that is your 506B investors. And determining, okay, out of my 506B, what is my expectation and whatever percentage of those total investors do I expect to bring in as the 506B? And then knowing that the 506B will be ending, you know, we'll just use end of the month, September 1st as a date. So how many of those will sign documents? They don't have to fully fund, but it's really like getting in your mind and putting on paper, right? Put it on paper. How many of my investors are going to be on the 506B? And then how many more will I be bringing on 506C, knowing, okay, 506C has to be all accredited investors only. So work through the 506B list, you know, and see, okay, by September 1st, I'm going to have, let's say I commit, I'm going to use round numbers, or I commit 500,000. And by September 1st, I think 80% of my investors are going to be 506B, right? So I need to have 400,000 in signed documents by then. And I'm going to bring another 100,000 through 506C. Anything beyond that is bonus or upside. So this is how we're trying to work through to determine at what different stages of the raise are we confident on what we're bringing, how we're bringing that. Then so that is the process, like we're having for everybody talking about their investors and their process. The second piece of that is, what are my actions and activities that I'm taking? Am I sending out how many times have I sent out the deal? How many people have I sent the deal to? Track these individual activities. I sent it to, you know, and put your list together and make a little checklist of all the names and the actions I've taken. I've sent it to all these, and I'll show you where we're doing on this. So just a little bit, and you can do this in Excel or whatever, but we look at a few things. So this is just the massive investors. We also have a list for the non-massive investors. As long as we see them in the portal, the names, we don't see any detail. We're looking, are they a new investor? Are they a current investor? What's their status? Are they verbal commitments, which is the soft? Are they in cash flow portal already? And then the next one is, have they signed the documents or not? And then if they, are they gone quiet? And then after that, then we also look like, hey, what did we do? We sent them an invite. So this is like webinar, right? We sent them the invite to the webinar. They registered for it. We directly invited them. Did they attend? Which webinar did they attend? So we're getting an idea of, like, out of our potential list, we got a potential list up here at the top of 84. And then we look and see how many of them, came to the webinar, how many have we invited, and so forth. So measuring all your actions as you go, when it is your, and we talk about a webinar, it does not have to be complicated. It's basically a calendar invite with a Zoom link or a Google Meet link to that. They come, you pitch, we support, we pitch with you. And that's a webinar, right? Doesn't need, I got to have a landing page, because again, we're in the 506B. So you're just inviting your friends and family. So that is some of the steps that we're looking at with, like, the people working with us, you guys, especially everyone here, especially, is what are the steps that you guys have taken. So that's where Maria may be reaching out, being hard on y'all. Hey, I really need to know, what are you doing? What's the actions you're taking, right? Because y'all signed up into this, like, hey, we're taking action. We want to be part of this and be doing the activities. So, so that's a little bit. I wanted to share what we're doing on the tracking of the capital raise. And then, like Schreier talked, we're looking at weekly measurements, 2 million this week, 3 million next week, and so forth, that we need to have soft commitments and then a combination of signed documents and funded moving forward. Now, all the documents everything is ready to sign in the portal. So all your investors should be getting in, start signing documents. Encourage them to get into your portal now, even before you have a meeting with them, so they can even just start looking at the whole process. Any questions there? Any other feedback, either Schreier or Sanjay, to share different?
This workflow, it's a rinse and repeat for us. So every time there's a project comes about, we'll just take display that Excel file that we have, the timeline. We just go through the whole thing. We've been through a version of that, very simplified version for the Westwood, because David and Leo did all the work, but we kind of measured it. We're watching over, hey, are they here? What has to be true? What has to be true? What has to be true? So that's why some of the question we ask, hey, what's the cash needed? What the cash funding? And Sanjay jumped in, I jumped in, we kind of got you through the process. So it's the same process as you go through. And this is the big one. And then right behind it, we got Candela. We'll follow the same cadence as well. So the cadence is the same. The work is the same. The intensity of work, depending on the size of the, how many zeros you have to go through. But that's the workflow. So we're building the similar version for Candela as well. We'll go through this. We'll bring the Candela out. On that note, we had quite a bit of learning. I think all those learnings that we had up until now, that was executed on for growth. It was interesting. I think we got the process right on this one. I get to say. So all the things that we ask because of those process, those point of learnings, point of failures, then optimization we can assure. So. Okay.
Then this is a little bit, this is where we're just talking, right? We start to see who's really focused on which BC and what like percentage is being focused on the different stages of the raise as well.
Interesting data.
And I wanted to, let me just last thing is, and then you guys may have said it or introduced it or talked about it earlier, but welcome David and Leonard to the master's program full time now with us and they're still wrapping up their capital a little bit, I believe, right? You still got a little bit of capital raise you're finishing, and then a lot of work coming forward with the operations. So congratulations again on the deal. Congratulations, joining us now full time. You'll be getting you fully onboarded with me, Rimsha, Ellen, and Maria as we go forward. So wanted to let everybody know that and shout that out. Go ahead, Schreier.
I said David and Bhaskar. So David and Leo, welcome. You guys work quite a bit with us. Now we'll hand over to David and Bhaskar to help you out on the asset management. So you'll see one of the partners working with you alongside David and Bhaskar on the finance, onboarding, accounting, blue sky filing side of it. So welcome. Really excited to have you guys here.
Really appreciate you guys, man. All the help along the way. Looking forward to it.
Thanks, guys. Really appreciate it.
Be ready to go wild on this one. I mean, I was like, acquisition is tough. It's a lot, but man, that's like only 3 months out of the 5 years journey. It's fun. Be ready. So yeah. What else? Okay, can I share a little bit more?
Yeah, you got like 2 minutes, I think, unless people are staying over. But it's all yours, Schreier. It's your show, man. Mike. It's your show.
Use, depending on if you're a capital raiser, you build the capital raising arm. I know Salchek is using, we're working with Masood. Oh, full disclaimer, I forgot. Masood and us, we departed. We started the relationship up on, as of today. We brought on somebody else that a little bit more experience on it. Masood is fantastic. He specializes on Go high level. He has done a great job. We wanted that plus SEO plus a bunch of other stuff. So we needed a little bit more deeper skill set from the tech perspective. So we have John Hernandez. He joined us late last month. He has a lot of coding experience, a lot of development experience, and then he's helping us building the back end of it. So just to let you know, so continue using with Masood if you are working with him. If you need additional help, work with him. Long way of saying that if you are focusing on capital raising, you want to build that machine, then go with the automation so you can track that things goes all right. For us, just to share that one of the things that we have done on this one, you guys will have a crack at it. Deals, Grove, 506B. So I want to share this. I am proud of it. Between John and I did. I want to go skin it out. We built a logic for one whole month and a half. So when someone will start the email right here on the top, that goes one webinar, second webinar, third webinar, fourth webinar, follow up, all the way down to here at triggering point. So we are measuring as many things as we can to check the sentiments as you go through. So if you're building capital raising, take our play, copy it over there, use a version of what fits to you, but go with the automation as you go. It's gonna make your life easy than anything else. That's what I would say. And Candela is coming. Be ready. I'm gonna switch you on that side of it. After 2 weeks, we're gonna release the Candela as you go through. That's all I had. Contract to close. Oh, Mike, we have one KP opportunity in Carolina, right?
Yes, so that.
What was the ask?
Huh?
Like, what was the explicit ask from the other team? Because I saw only 2-page contract. If I see 2-page contract, I get worried. So.
When did the contract come in? Last night? I didn't see it. I kept watching for it. Yeah. So it's a single person. It's not a team. He's there, boots on the ground. He's a contractor. He's part of Cardone. David and Leonard may know him as well. name's Troy Penner. He needs a KP for the loan, and it will need some guidance and support to work through the whole process. It's his first deal out above 4 units.
Okay.
He's done other deals before. He's been in the business as a contractor for 18 years, I think he told me. And yeah, and I knew he was moving on. That's why I told him, I said, share some of this over, because let's be sure you're not getting into any trouble early before you sign any more. So he's talking to some other people too. So just, from the call, he had a few other people that was looking at it. But I thought it's a nice looking deal if everything works out on it. An 84 property in South Carolina. It's a smaller area, part of Darlington area.
Wonderful.
48 units currently. I think it's like, I don't remember, 78,000 a door or something like that. What else? And then there's an office on site. So the longer term plan would be convert the office to a unit as well. And the CapEx is in there for that, but not the rent.
Okay. Cool. Yeah, let's take a look at it. I also have another one in North Carolina. So South Carolina also 56K door. I gotta finish the underwriting. They need like $2 million plug and some operational help. The team doesn't know how to. The team is structured. They don't have operational expertise much at all. They have one guy who owns a bunch of assets, but he's just a loan guarantor. Another guy from Equity Raiser trying to run the deal, but he got 10 other deals. He raises money and he wants to grow to an asset manager. So when we ask the question, how much time do you have a day or in a week to run a $25 million deal? Answer was 2 hours when I sat down and calculated. I was like, it's not gonna work. So its point is we want to support as many deals, but we also want to be true to the project to make sure the team has the right resource and right caliber to execute the deal, not just because I feel like it. So that's why we objectively test all those things. And especially any asset managers, we ask the question, how much time do you have that you can allocate for that particular project? Especially, first 6 months is so up ramp that you're gonna go through. Okay, cool. Thank you, Mike. Thank you, everybody. Let us know if you need anything. And I'll probably be in San Antonio next week one time. I was in Dallas last week. Didn't get a chance to share. It was like an in and out day. San Antonio, the Horizon deal. On that, and just to kind of leave you on that note, Horizon. Okay, Horizon. I'll be there next week, Tuesday or Thursday. I'm not sure. On Horizon, we struggled to do the capex in first 7 months. New team, new focus, new everything else. We have done 30 units in about 45 days or less. So when you put in the right team and right focus on it, thing happens. And this is this. So we had 3 problems there. Organizational structure problem, we resolved it. Second problem was units not being ready. We resolved it. Right now we're on the third leg of the problem, which is the lead gen and continue building the culture. So we're on the third leg now. And so that is the leg that is happening right now. It's almost on a day-to-day basis. Our CapEx school will come back to Houston this Friday. The rest of the CapEx school will go back to Dallas as well. And then by the time we leave, the property will feel good from the outside, feel good from the inside. And right now, our battlefield is all about the lead gen and conversion. That's where we are. Just want to let you know. Cool. That's all. Anybody? Any questions, comments?
Wait, I didn't know that. So, Maria, you've been here the whole time? Did you just join, or you've been here the whole time?
No, I've been here the whole time.
Oh, I didn't see you in the background or in there. So
I had
yes,
my.
I hope I
I didn't
covered
have my video on.
I hope I covered everything for you.
You
Okay?
did. You said only nice things about me, so thank you.
No, and I said you guys get ready because Maria's gonna be.
I am, which is
busting
true.
your-
I mean, I'm coming after you guys, not in a mean way, but like kinda. So like, be ready. If you said you were raising, I'm coming after you guys.
Awesome.
Cool. Thank you, everybody. Really appreciate it. Thank you for all the support. And I know we do what we set out to do. That's all.
All right, guys.
Oh, by the way, David and Lee, you guys are coming, right? On 23rd. I'll see you guys there. I forgot.
Yep.
Cool,
Yep.
cool.
I'll be there.
Please
So,
bring your laptops.
Yeah,
we need to
Bring your
absolutely.
laptops.
Yes,
I'm
please
working
bring
on
your
it. I
laptop.
actually pushed some family back a couple of weeks because of closing, and now they're here now. So I'm trying to sneak out next week and meet you guys out there. But Leonard's coming for sure.
Awesome.
Yeah, already confirmed. I'm coming. So do I need to get a ticket again?
I think so. You already got one or what?
No.
We'll work it out. Just drop me a text. We'll work it out.
Fine.
Okay, I'll send you.
Yeah. So we'll have, I think, a networking event day before dinner, day off, then so that we can leave on Saturday right after school. I mean, the whole thing ends. So she's gonna go. That'd be cool.
Oh yeah, I'm leaving on Saturday.
You guys will get a kick out of it. So I went to a Rice alumni event yesterday, and there is a Rice as a CRE roundtable that the virtual one, I kind of bought myself into it, and I kind of run that. Not that many people show up there. I have 10, 12 people show up. And one of the gentlemen is showing up all the way. First couple of times I didn't know, then I was like, I know the name. Then I realized he's an adjunct professor at the B school. So he had a deal he brought in, we underwrote it, and my position was in the middle, right? So he didn't like it much. But then I was like, let's go meet in person. So I met in person yesterday. A really nice guy, really sharp guy. It meets the definition of the B school professor, right? Really sharp guy, and we had a good laugh at it. And he goes, "Can I bring the students?" I was like, "For what?" He goes, "So he can, So I caught up with Nikhil afterwards. I did after I left. So when we went, I was texting him. He was like, "Can I bring some students?" I was like, "No, your education, what you learn from the school, what happens here, you're gonna freak them out. So there's no point." And then I found out there is another group, Cody did that. He took 5 interns this summer in his organization from the Rice, from the MBA.
Cody Laughlin?
Yes, he
From
took
Blue
5
Oak?
interns.
From Blue Oak?
Yeah. No, not that Cody. There's another Cody within our Rice program.
Oh,
He does
okay.
what we do. He's a VC type guy. He does small business investing, and he's like a hard money type with some funds with the families and something in that fashion. So he took 5 interns. I was like, okay, maybe next summer we'll take some interns too. So go from there. It's a cool network. And then there is another gentleman, Mike. I want to make an introduction. John. He wants to come to our event. John comes from a construction background. He's in the CRE roundtable as well, and I think he will appreciate it. That's all. So no professors, it'll be fun. But if they send us some B school students, we'll take them, even though we're messing around. All right, gentlemen, ladies and gentlemen, thank you very much. I appreciate it.
Hey, Alan, see my message? Can we underwrite an RV park?
I've not done one before, so.
Okay.
So what's the story on that part?
Okay, here's the thing. So I was talking to this guy. I was talking to him about capital raising, and then he told me about a deal, and he's like, it's in Waldo. And then I said, where's Waldo? So obviously we're now best friends.
Sounds like a hamburger to me, but I mean, whatever. Sounds good. Waldo.
Where's Waldo? Do you know what?
No.
You don't know where's Waldo is?
I don't.
It's a book.
Sounds like
You're
a
trying
food
to
name
find
though to me.
Waldo.
Okay.
Oh my gosh.
Sorry. So
it's like
what's
a
the
book.
story? I didn't get the story. He has a deal, but how does he know that's a deal?
Well, I was wondering if we ever underwrite.
Hold on. Before you trigger the work, I know you want to do the work, but how does he know that's a deal? That's my question.
Because he lives around there.
No, I live in Houston. I don't know everything about Houston, right? I want to buy an
Oh,
office building.
he underwrote it. He underwrote it, and he's excited about it. And he is a wholesaler, and he was talking to me about short-term lending and
come
about
on, wholesaler
capital
brothers and
raising.
sisters. Oh,
So here's
hell
the
no.
whole thing. We were talking about
So,
capital
okay,
raising,
okay,
and then
finally,
he found out what we do.
All right. So wholesalers, I have a love-hate relationship with them because so if they think it's a good deal for them to do it, automatically you cut the price by half.
Right.
It's just
I
starting
assume.
point. Yes.
I
So it's like a first bold, realistic assumption. If you say it's a badass deal and you don't own anything, your wholesaler, cut the price up by 20, 30, 40, 50%, depending on who you are. And then if it makes sense, you do it. So that's why I always ask a question. Every deal is fantastic, but you ask the question, how does that individual know it's a good deal? And if you don't own the assets in the category, you do not know whether it's a good deal or not.
Oh, I know. Here's the thing. I raise capital. Okay. I can look for the good in everything. I am
I'll
not
talk to him.
an
Send me a text.
analyzer person.
Send me a text. That's fine. So my story on the RV park. So RV park is okay, but mobile home park, I can't handle it, man. The stuff that I've seen for a couple of times when I attempted it, just not my cup of tea. Y'all can have at it all you want. RV park, I don't know. So we're not gonna underwrite it unless she proves it is worth underwriting it.
Good deal.
Thank you, Ellen. You stay at bay, please. So ask the question, how do you know it's a good deal? If it's a wholesaler, they will say, I talked to the seller is dying tomorrow. He wants to give it up for free. Well, like, that's perfectly fine. Show me the contract to have it and how much you have it for. Then we can come talk about it. But do not do any extra work, please.
I passed it off to another group. Don't worry. I was just wondering.
No, just ask him the question. I want to do it. Show me the contract. That's all. You know,
It was
protect your
just
time.
funny
I
because
love
it's
you guys.
called Waldo. And I know you don't know what Where's Waldo is, but it's a book.
I got you.
You've never played that game?
No. Sorry, I'm a boring guy. I'm so sorry.
Anyone else? Does
I'm a
anyone know Where's
professional
Waldo?
heartbreaker.
Thank you, David. Thank you.
Damn it.
David's got my back.
Damn it. I'm a
It's a
professional
thing.
heartbreaker.
It's fun.
It's a thing. It's not like a new thing either.
My loyalty lies with Ellen's time and Ellen. I'm not gonna, I'm gonna protect her time. So I'm sorry.
I don't like to do that. Why do we protect time? You don't sleep anyway, Shark.
I do
Yes,
sleep
but
though.
I do.
That's a lie. That's a blatant lie. I sleep a little bit. I don't know what the
There's
difference
no
is.
way. There's no way you do, because I know what times you're in the WhatsApp because I can see it. Okay. The WhatsApp doesn't lie. I see the times that you respond. There's no way you sleep.
I do sleep.
Well, he might be sleep texting, you know, just
Right.
processing
I have
things.
automated. I have
He, like,
automated
wakes
text set
up.
up.
Yeah, I know we have automated texts on Go High Level, but I don't think you can do that on WhatsApp.
I was like, you know what? That's a good idea. I'm gonna send text Mike 1 o'clock in the morning, Sanjay 2 o'clock in the morning, Maya 3 o'clock in the morning, just automation.
it.
Then wake up in the. Oh. I'm in your dreams.
See?
That'd be kind of cool.
I knew that's what you're
Bad
doing.
dreams. Anyways,
Hey,
let's go. We're babbling.
So I shared in the chat for those that it's just one of the event, but if you go to that Eventbrite and then you follow Massive Capital, David or anybody else, so that's an Eventbrite. So that's the networking event the night before, on the 22nd, on Thursday night before the masterclass. So if you guys go there, sign up for that. But also follow Massive Capital. That way you'll see all of our events. There's a dinner also, if you guys haven't signed up, the dinner on Friday night. So I'd encourage everybody that's coming in town, sign up for the dinner so we get a good head count on that as well. All right, so, but I just put one link there, but it'll get you to, you can kind of follow Massive and get to all the other ones as well. All righty, thanks, everyone. Click the link in the chat. My last.
Click the link in the chat.
Click the link in the chat. All right.
That's good. Bye,
Rudy,
everyone.
how long would you be
Bye.
out in Europe? You going to Italy this time? Or you're from there?
Yeah, a couple of weeks.
Nice. Have fun.
Is that where you're doing your pitch to the Chamber of Commerce?
No, I'm doing when I come back on the 13th.
Okay, that would be super cool if you're doing your pitch in Italy.
No, it would be here in Houston.
Okay.
Hey, I'll be going over to Turkey next week too. Well, we can meet right in the middle.
Sure. Could meet,
If
have a massive
a
meetup.
couple of people joins, maybe I'll tell my wife, hey, I have a professional conference in Europe for 2 days.
Do it.
She's gonna kill me on a heartbeat. She was like, I smell your bullshit, right? It's one of those right there.
Right up there with the sleeping. All right, try you. I'll see you in a
All right.
second.
See you later.
Bye, guys.